Hey guys, this is Paul with your Bold Profits Daily. Today I am giving you an update and a re-recommendation on a hot sector of the market that I told you about earlier this year. And the sector that I'm talking about is biotechnology. Biotechnology was all the rage a few years ago, and it peaked out in something like 2015 or so. And since then, it's just been a little bit dormant, trading in a range. Now, I told you back on January 7th in a Bold Profits that it was time to get back into biotech. And that call was a good one because since then, biotech has gone up and has gone up a lot. In fact, it has gone up from the time we told you to buy in by about 25%. It peaked out on April 5th, and since then, it has moved back down. So I want to give you an update on what's going on. So 3 reasons why I believe it's time to reload on this trade because I believe bigger gains are coming. So going back to the original recommendation, January 7th, we told you to get in. And because healthcare stocks and biotechnology stocks have sold off, it's only up 12% since we told you. However, many of you are probably thinking you should give up, and I would tell you it's time to reload. And here are 3 reasons why. Number 1, first, the particular ETF that I told you about is very unique in that it's got this equal weighted way of making bets. In other words, most ETFs weight the bigger companies. So in other words, if a small company with a tiny amount of weighting was taken over and went up 50% a day, it just wouldn't move the needle on these other ETFs. However, on this one, it would matter. And as you know from the previous update, there's a lot of takeover activity going on. A lot of these smaller companies are being bought up by much bigger pharmaceutical and biotech companies. So the equal weighted structure of the ETF that I told you about is one reason to get in. In other words, the environment is good for these small and mid-sized companies that are being bought, and they're also being bid up a lot. So now let's go back to why has there been the fall off in the performance of this ETF? Well, you can blame it on politics. There is a lot of talk about Medicare for all and drug price regulation. And every time somebody says something, people go to take gains and they sell their stocks down, and that pushes prices down. However, the reality is that this is in some ways fake news. This is never going to happen, and if it did, it would unfold slowly over time. We have a healthcare and a drug system here that you can never change overnight. You would have to reform it slowly over time, and you would still want lots of incentives for the kinds of companies that are in this ETF to succeed. Small, mid-sized companies that are really pursuing medications, medicines, drugs for conditions where there is nothing else. So I would tell you that this is a false scare and you should stay in and not worry about it. Third reason you want to be in is that the growth rates in terms of sales, which is what really matters for stocks, are huge for so many of the companies that are in this ETF. In fact, when I looked it up, some of the companies have growth rates of as high as 45%. In fact, that particular company is in my True Momentum service. And I'm about to recommend another company for my True Momentum service that has a growth rate of in excess of 30%. And that's a big number, and then that could go higher. And I can tell you that the biotechs that we have recommended in the True Momentum service have skyrocketed. We have 100% gains and even more. And I believe this next pick could be as big, if not bigger. So as I tell you all the time, if you want the big gains, you got to be in the single stocks. Now, the ETF will give you incredible, perfectly good gains. Single stocks, though, they'll give you skyrocketing, explosive gains. So check out my True Momentum service, and my publisher will be sending out emails to all of you telling you about this opportunity to get in. In the meantime, stay in the Biotech ETF that I recommended. It is the S&P Biotech ETF with the ticker symbol XBI. So that's my recommendation for you this week, which is that stay in biotech or get back in biotech if you got out, because this particular ETF, being equal weighted, gives you lots of ways to win. The sentiment and expectations are down because of politics. In other words, most people have gotten out. In other words, there's a lot of demand on the side to get back in as these prices move up. And the underlying sales growth is just massive. That's what matters. That's what attracts investors. And that's what's going to push this ETF up. So that's all I have for you this week. I'll have another one for you next week. Until then, this is Paul saying